Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we're counting down to the next VRIC January 21st and 22nd. Tickets are in the description below, so go ahead and get yours now. But as usual these days, we are bringing the VRIC to you with our series of online panels. We have another great one lined up for you today. I'm here with Craig Hemke of the TF Metals Report and Lobo Tiggre from the Independent Speculator. Gentlemen, it's great to have you on the show.
Thanks, Jesse.
So let's dive right in. I want to talk about gold and silver. And I want to start with a broader 30,000 foot overview question for both of you. And that is, I'd like you to break down both the current tailwinds and potential headwinds you see for gold in both the short and long term. And Craig, I'll start with you.
Well, it's certainly been a challenging year. I think everybody probably feels that way. It's easy to forget that gold's up $100 or so, a little more than $100, like 120 maybe year to date, and well off its lows from late last year, which, I think we all felt really terrible about a year ago at this time. But it's also, it's also not really going up yet either. I wrote in my annual forecast that I do every January, and I thought the back half of this year would be better because by the back half of the year, it'd be pretty clear that the economy is slowing and everybody'd be thinking that the Fed is now going to be pivoting and pausing and all that kind of stuff. And it's still the forecast. The Fed themselves have that forecast, but it sure is taking a lot longer than I thought. And I think I'm probably not the only one that feels that way. The good news, like I said, is the last time you get back to last fall when the dollar was soaring and the yield on the 10-year note was more than 4% and gold was $300 lower, 20% lower. Why it's still 20% higher maybe has more, with kind of a fear of missing out. People like me anticipate that the Fed's going to be shifting policy and they don't want to miss it when it comes. But it has been a very frustrating waiting game, especially for people who own the mining shares. And so really at this point, all we can do, it seems like, is wait and be prepared to wait maybe a little bit longer.
And Lobo, same question for you. And I'd also like to get your take on the hard landing versus soft landing narrative. I follow your newsletter, and I know you are not. You are more of a believer that we have a recession coming up ahead. So in that scenario, what would that mean for gold?
Well, in my view, we are in a recession. We are in a deepening global recession. I don't think the U.S. is exempt. I think the labor hoarding post-pandemic has masked the recession that you see in just about every other major statistic, yield curve to, most everything else. So my view is not that different from Craig's. You asked specifically more for headwinds and tailwinds. And I think that right now and I wrote about this actually, I'm not one for making predictions. That was more of an if-then, almost like a TA guy, Craig. It was if we got an appearance of victory of team soft landing coupled with a dawning acceptance or perception that the Fed means it about higher for longer, these two things together would be bad for gold because you'd have high interest rates and gold doesn't pay interest. And you'd have team soft landing as apparent victory, meaning we don't need no safe haven assets because everything's going to be fine. And it's hard to see gold thriving in that kind of environment. And I think that's one reason why, though, as Craig wisely points out, gold's actually doing fine. And especially in a high interest rate environment, it's doing extraordinarily well. But I get it. It's down, from recent all-time highs and people wanted to be going up, not down. I get it.
Yeah.
But looking at the context, this actually makes sense. If you look at the kinds of things that have driven gold lately, I'm not surprised. So, the bad news is for the immediate future, this is actually still bearish gold. And to the degree that silver follows it, that as well. And the good news is I don't think this lasts. I think as has been framed, I do think we get that pivot, and not because the Fed has beaten inflation, but because it becomes evident that the Fed is breaking things and the recession becomes undeniable. So I think that's where we're headed. Craig mentioned back half of the year. I think my view is similar, and we're just getting into that. I'm not worried about how things are going right now. I don't see anything right now that says that I'm materially wrong about what I've been looking for. So we'll see. Let me distinguish real quick. Silver has been frequently tracking copper more than gold this year. You look on the daily charts, the intradaily charts, and it's striking how often silver looks just like copper, but on a slightly different level or something, instead of gold. Overall, year-wide long, the correlation is still high with silver and gold, and that's good. It's still a monetary metal. Woohoo, you don't have to call me Darth Silver. It's still a monetary metal. But I mean, I really think silver bugs need to not be religious about this and look at the data. And when the data tells you that things are changing, you cannot stick your head in the sand, at least if your goal is to make money. If you want to promote silver, fine. But if your goal is to make money in the markets, you have to look at the changing data. And I think, just simply put, the data tells us there is a changing use case, as the modern parlance has it, for silver. So I think that's interesting. And if that's, you're looking for headwinds and tailwinds, it's possible that the coming tailwind for gold that we see with a recession might actually be a headwind still for silver. Remember, it's not just you and I and Craig going down to the coin shop or wherever and getting our eagles and maple leafs. It's these comics guys and LME guys. They're not looking at silver the same way we are. That is battle, and we're going reason to be just acting over to soar with gold at the same time.
Well, I'm glad you brought up silver there, Craig. I'd like to get your thoughts on silver as well. Headwinds and tailwinds both, and your thoughts on silver tracking copper, as Lobo spoke about it, and its increasing role as an industrial metal.
Well, actually, I'd love to go back to Lobo too, because he follows the natural resource sector so well. The changing use case for silver. Please, let's go back, because I'd like to get more on that, because I just want to hear more regarding silver. It does track copper. Gosh, and the algos track it real closely with the dollar index on a daily basis. Copper is such an interesting story. I was writing about it back at the beginning of this year. There was stories out of Goldman Sachs that we would deplete the global copper stockpiles by August or September. And apparently that hasn't happened, which apparently for a number of reasons. And so, I've been waiting for copper to break higher and get above $4 a pound and start moving back toward 440 and even 480, but that hasn't happened. Again, a lot of this will go back to the dollar index. We've really had a very challenging July and August. It looked great for a while as the dollar index was falling below 100. And all of a sudden, a whole bunch of money came rushing into COMEX silver futures, and silver popped, a couple of dollars in about 5 days back in July. But ever since the dollar turned off of 99 and is now up toward 105 in the last 7 weeks, silver's gone back down. So again, to me, I kind of separate the physical demand with the derivative demand in determining, what's going to move price in the short term. And if we can get that pivot, if we can get a recognized change in Fed policy, whether it's the recession or whether it's a renewed banking crisis or whatever that sparks it, then I think we get a more sustained bid for the precious metals coming off of that dollar weakness. But like I said, we all talk about, the Silver Institute and the whatever it was, 237 million ounce deficit next year. And a lot of people get excited about solar panels and electrification, all that kind of stuff. So, like I said, I'd love to have Lobo touch more on that, because that's the changing use. Please go on, because I need to know that stuff too.
Yeah, absolutely. How do you see the industrial role for silver developing? How much does the new green economy, solar panels, et cetera, play into that as well?
All right, so I don't have a compelling set of statistics to present to you here.
Okay.
But I think the key points are that, again, you and I and how we see this, and even the term monetary metals, it's not how these guys who are trading futures contracts on the COMEX think about things.
Right.
And I like to say that I like to refer to both gold and silver prices as the gold dollar exchange ratio, because gold is money, and the silver dollar exchange ratio, because silver is also a monetary metal. But that's not what these futures contracts are. And so to refer to them as the price of silver or the price of gold, I think that's actually shooting ourselves in the foot. We're sort of letting the enemy define our terms. And what these futures traders who look at these metals differently than we do trade amongst themselves, all this paper shuffling. I just think it's a huge mistake to even, I mean, but it's convenient, right? It's electronic, it's instantly quotable, and that's why we keep doing it, even though we know it's silly. But the point, though, is that these guys are looking at silver and even gold as being just another commodity, like pork bellies or coffee or whatever. In that case, when you see this narrative getting so strong about the solar panels, as Craig mentioned, and even electronics, everything else, the use cases for silver that the commodities trader, the futures trader is going to read about are largely industrial. It makes sense. The data fits. And when we see the charts wiggle on an intraday basis and silver looks like copper instead of gold, I think that's telling us what's going on with the psychology of these people whose trades we mistakenly refer to as the price of silver. Gotcha. So while that's in the driver's seat, be careful.
Yeah. No, and I got you completely. I didn't know if there was something about future physical demand or something like that you were looking at, because no, I agree with you completely, Lobo. There's these notions out there that somehow physical supply and demand is the driver of price. And I haven't seen that really ever. To me, it's always been the supply and the demand of the rehypothecated, digital derivative market. It's what moves price on the COMEX. Well, if these funds are in there or the algos are in there on a certain day, buying or selling or shorting, that's what moves. I mean, look at just the last, even this week as we record this, in the last 5 days, silver's down $1.50 or, like 6%. Did suddenly the physical supply of silver improve by 6%? Did I miss that somehow? Or did the physical demand drop off by 6%? No, it's just these futures bets. And so Lobo's absolutely right. And it really, until that system, and I've railed against this now for 12 years, until that system changes, that system gets its own little bank run, and you get called to the carpet on this multiple times of leverage that's within it, then it's the system that we're in. And we just have to accept the reality of that and try to position ourselves accordingly.
Yeah, it couldn't happen to a nicer bunch of guys, and I sure hope it does.
Right.
But meanwhile, I think a key point here, we don't want to go too deep in the tin foil hat direction, but I think it's really important for people who understand what we're touching on here. Don't panic, don't give up. There's people who they get so mad, they get disgusted, they get emotional. Well, the game is rigged. I'm taking my marbles and I'm going home. You're leaving money on the table if you do that. The fudging around the edges or whatever manipulation is happening, they can't stop the metals from going where they will go when the market really gets the bit in its teeth. And they don't stop the stocks from delivering gains when the metals move. So don't give up, right? whatever problems there are with our markets, it is still possible for a disciplined speculator to do well.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Very well said. And I do want to dive into that a little bit, the manipulation of gold and silver through paper contracts. I know both of you have spoken about it before. Lobo, you've said that it's not something you pay a whole lot of attention to because in the end, it doesn't really affect the overall thesis for you. So maybe we'll start with you, Craig. To what extent are the precious metals markets manipulated, and how much should investors be paying attention to that aspect of it?
Well, if you break people into investors and traders, I guess is one way. I think investors need to be aware of how this price is discovered, like we were just talking about. And if you understand that part, then you understand the underlying value of the physical metal might be undervalued. Let's put it that way. You get this perception that there's a lot of metal around. That changed after the London gold pool failed and futures contracts were introduced. You had this kind of alchemy of metal. Oh, no. These futures contracts, this ETF, this unallocated account, all of these things are just as good as gold. And really what you're buying is leverage against the physical. And if that leverage gets unwound, then maybe we find out what the physical is actually worth. And so for physical metal stackers, they can use this. It's like rent control in a sense. You can use this in your favor. But traders need to know this too. And we just went through another period of this. We saw this happen 4 times last year, where the shorting and the selling gets so pervasive by hedge funds. And a lot of it is just done automated. There's not a whole lot of hedge funds out there that are commodity centric. People say, well, why do the hedge funds keep falling for this? Well, they have maybe a 2% position in a futures contract. They don't give a crap. It's just zing and zang and yin and yang, and they can charge their 2 and 20 and show how diversified they are and all that kind of crap. And a lot of it's done by computer. And so the computers see the dollar going up and they just reflexively sell and short the futures contracts. And then you get into a position like we got 4 times last year and we got as recently as last month, where the hedge funds are net short versus what the CFTC calls swap dealers. What are swaps? Or derivatives. What derivative? Futures and options. And who are the dealers? The banks. And they're the ones that have the physical books in London, so they know where the orders are. And they end up being long. Well, geez, Louise, we've seen it. You see this on the other side so many times where the funds are long and the banks are short. And what happens? You run out of buyers, you run out of momentum, the price starts to tip over, it takes out some moving averages, everybody heads for the exits at once, and you get this washout. The opposite is what we've seen lately, 4 times last year. And again, like I said, just last month, where all the funds are short and they've all piled into the short side and the banks are long. And then what happens? You get a short squeeze, 12% in 5 days, 19% in 7 days, that sort of thing. And what it ultimately does is it does provide kind of a floor. I don't know. Well, when I first got in this a dozen years ago, you don't have to trade the metals very long to realize they trade kind of screwy. And there's a lot of folks that I respect that think, it's a government mandate, a Fed mandate, a BIS mandate, and all this kind of. I don't think they really care. I don't think Jay Powell gives a shit what gold's doing. I really don't. I think the bank trading desk, however, whether it's JP Morgan, with the recent convictions, and I know this still continues, they have an incentive because, again, they know where the orders are. They know where they've got the books. They know where these funds are. They know where the fund positioning is, and they have the ability to swing price in both directions. I don't think that they don't manipulate it to the upside in these short squeezes either. And so I think if you know that, if you can, to me at least, you can factor that into your trading. And it does, in the end, provide kind of a floor to price like it did last fall. Because if the banks know all this stuff and they are getting increasingly net long as price goes down, I don't think they're going to be losers, right? There's going to be a point where it benefits them financially to squeeze it back higher. And so anyway, I'm just a long rambling answer. I didn't mean to go on this long. I had too much coffee. It's still morning where I am versus you guys. But I do think, one, investors can use this to their advantage, knowing that maybe the true value of the physical metal is different from the price that you're seeing that's derived by the trading of the derivatives. But I also think traders, if you understand the forces that are in play in these, especially silver, this little itty bitty market, you can kind of use that to your advantage in terms of how you're positioning yourself. Sorry, I'll be quiet now.
No, that was a great rundown. And I'll turn to you now. As Craig mentioned, the JP Morgan traders who have been convicted, I believe they're going to serve some amount of prison time for spoofing in the precious metals market. A lot of people will point to that and say, see, there's a grand conspiracy going on. I see it all the time in YouTube comments. Silver's not going to do anything as long as this manipulation's going on. It's just going to hover around this price range for decades, and people get really discouraged. So what's your take on the manipulation question?
Some very simple points. I mean, if the claim that it's totally manipulated, therefore I'm out, I'm going to take my marbles, it's simply not true. If it was totally manipulated, gold would still be $250 the way it was 20 odd years ago, right? Silver would be $5. So to whatever, first, there's nothing we can do about it. Like, we're not going to be able to go down to JP Morgan and storm the gates and get them to change their ways. So just like, breathe deep, do some meditation. It is what it is, unfortunately. And the other thing is, as I'm saying, to whatever degree they are messing with the market, they don't have control over it. They haven't been able to stop. I mean, in 2008, all the crazy stuff that happened, we said this would be good for gold, and we were right. Volatility aside, manipulators aside, they couldn't stop gold from doubling and beyond by 2011, right? And in 2020, when we saw the money floodgates open, we said this was going to be inflationary, we said this would be good for gold, and we were right. And yes, the markets have done crazy things and team soft landing, whatever. But the reality is that gold has done what it was supposed to do. We were right. The manipulators can't stop, ultimately, reality from manifesting itself in the economy. So just simple points, don't get disgusted, don't give up. Or if you are disgusted, and, grow up a bit, and just, if your goal is to make money, understand that reality does matter. And if you can ride out the volatility with discipline, then you can still achieve your goal.
Yeah.
I want to switch to the broad economy for a moment. And there's been a series of bullish articles and headlines recently. I'll read a couple here. More analysts believe economy will have a soft landing. 69% of business economists polled in August said it was at least somewhat likely the U.S. economy would have a soft landing. I like how they make it kind of vague like that. World economy latest, case for U.S. soft landing grows stronger. We're seeing more and more of these headlines. We see some pretty high profile people at financial institutions these days too saying, actually, we've reevaluated everything. We don't think there's going to be a recession anymore, guys. Things are going to be great. So Craig, I'll start with you. Is this fabled soft landing possible? And in such a scenario, what would that mean for precious metals?
Well, I like to say that, especially at my advanced age, I've learned there's a real fine line between being a cynic and a realist, right? So I might be verging off into the cynicism category. I don't know, but I saw a great thing on Twitter a couple weeks ago about how, since Google came into existence, whatever it is, 23 years ago, each time before, from 2007, and then even in 2015, if you will, but then again in 2018, right before recession hits, you get a spike in searches of the term soft landing. I even get people, I remember back when I first became a stockbroker, I'm dating myself, this is all the way back in 1990. There was a recession that was building then. And the discussion wasn't so much hard landing, soft landing, it was that the airplane was going to buzz the field, right? And just keep on going. And so it's kind of typical. People just kind of run up the white flag and they say, well, geez, I can't believe that there's not a recession yet. Okay, look, the Fed has been hiking more aggressively than they have on really, I think, ever, maybe one other time. They're 18 months into it. I saw a chart from David Rosenberg, the Canadian economist, that said in the last 7 hiking cycles, the average length of time it takes, I mean, it's disparate from 13 to 30 something months. The average is like 23 months. Okay, so people run out of patience and they think, well, everything's just going to go sailing off, because they don't understand the lagging effects of how long it takes for these mortgage rates to work through, and how initially people aren't selling their homes because mortgage rates have gone up so much. So I'm not selling mine. So therefore the home builders have to drag forward a whole bunch of new supply and rapidly build homes to meet the current demand. Then all of a sudden the housing sector collapses. I mean, all of these things take time to play out. So I don't want to just disqualify the whole question, Jesse, with another long monologue that's probably just driving people crazy because I won't shut up. But I don't think there's going to be this soft landing thing. If it does happen and the Fed keeps rates at 5 some odd percent for the next 2 years, and because they're able to, then yeah, the metals are probably just going to continue range bound like they did from 2014 through 2018. But I tell you what, I think the signs are out there that this is coming. There's enough of them, and the soft landing folks are going to be disappointed like they have been in each of those other occasions that I mentioned before previous recessions.
Lobo, I know you're more in the hard landing camp. So is there any possible way for this soft landing to be pulled off? Why is the financial media starting to put this in people's faces right now? And what would happen to the precious metals in such a scenario?
It's happening, and I mean, it's to me an utter fantasy, the soft landing scenario. I agree with everything Craig said. Again, from the inverted yield curve now starting to disinvert, from the timing, we're now just sort of getting into the average length of time that these delays. And it's striking that you see successful, educated, older, experienced Wall Street professionals getting on there and saying, "Oh, if you hadn't had the hard landing by now, we're not going to have it." Like, on what planet? Certainly not this one. I just don't understand how a serious financial person, not us wacko gold bugs, but these are, professionals on Wall Street, serious financial media. How can they say these things and not understand that what they're saying flies in the face of all experience? I mean, government revenue, there's just so many things that show the economy, starting to pull in. And in my view, we're also starting to see cracks in the labor market, which is the one-legged stool the economy's been perched on. Everybody keeps saying, "Oh, you can't have a recession with a strong labor market." Well, actually, that's not true. You can. Communist dictatorships have shown us that you can have a shrinking economy where everybody's employed. It's simply not the case that labor and economy are synonymous, but they're treating it like this is a fact, and it's unquestionable. So you were asked, how could they be right? I guess somehow, if all of history is wrong, and you can tighten rates this much. Well, let me just say, all right, okay, here's maybe a simple way of putting it. Rates have really been normalized. Now, I think Craig would agree with me that normalizing from zero is not normal. And doing it in such a short period of time is such a shock to this, heroin addicted patient that so many of us in the hard money movement have talked about. That shock is just it's inconceivable, to quote the Princess Bride, that could happen without major fallout, major problems, things breaking, like the gilts or like the regional banks, and the next shoe to drop, we'll see. But if we're wrong, and if somehow the new maestro has normalized rates, and that's it, nothing else is going to break because now we're back to normal, well, then you could have a soft landing. We'll be wrong. And all I can say at that point is, dear audience, that will be a moment in which I'm glad I'm not just a gold bug. My uranium stocks should go nuts. My long, suffering copper stocks that, we started talking about earlier should make up for my losses in silver or gold if I have losses. We'll see. I think we're right. I think the mainstream is wrong. And I think by the end of this year, people will see that we're right. But that's the answer to your question, is somehow if, all the data we look at is just somehow not important, this time is different. And they managed to pull off this soft landing because, after all, we're just back to normal. It's just normalization. That would be a possible way we could be wrong, Jesse.
And Jesse, one last thought. I didn't get to my cynical part. A real common view, at least I should put this way, is that you look at the COVID shots and how the news is sponsored by Pfizer and Moderna and all this kind of stuff, and people are like, "Well, geez, look at." Of course it's slanted. They're this segment brought to you by Pfizer. The financial media is the same way. You turn on CNBC or Bloomberg, all of their advertisers have some interest in having you be in the market, stay in the market, talking it higher so they can collect their fees and everything else, right? And so everybody's got their beak in the same trough. They haven't, like I said, cynical of me, but they all have a financial interest in kind of pumping a positive narrative. And then you put the political economists on there, whether they're Krugman or people at the Fed or at these banks or whatever, they're also pumping a narrative for political reasons. So I wanted to get back and add that. Again, maybe I'm just cynical, but I think the forces are aligned to constantly promote good news and get the stock market higher and that kind of thing. And I think people need to kind of always factor that in as they observe the news flow and the financial media and how they cling to that soft landing stuff.
Yeah, I think that's a very good point.
Let me second that emotion, because you don't have to wear a tinfoil hat to observe. Just if the goal is to make money and you're mainstream financial media and you're there to be serious professionals and offer people guidance, if the goal is to make money, it doesn't matter whether the markets go up or go down, because you can go short as well as you can go long. But they're always cheerleading for the stock market going up. It's only up is good.
Yeah.
But that's not necessary if your job is to guide people on how to make money. So I think it's unquestionable that there's a bias there.
Yeah.
Absolutely. Well, thanks to both of you so much for joining us today. It's been a ton of fun. Would definitely like to do it again, dive into some other commodities, uranium, which I know, Lobo, you're very bullish on. But before I let you go, Craig, tell us about the TF Metals report and where people can find that.
Yeah, this is my site. We're coming up on 13 years. I was a young and vibrant looking young guy when it started. And this is what the precious metals have done to me. Anyway, it's a really nice community. It's kind of an island shelter in the current storm. I provide analysis every day, but it's the interaction with like-minded people all trying to help each other out that I think adds value. I just throw this in there real quick. It's $15 a month. But because it's such an interesting time, I haven't run a coupon code in, 6 or 7 months. But if you come buy a monthly subscription and type in GOLD, GOLD, sometime in September, it'll cost you a whopping $5 your first month. That shows you what a great businessman I am. I'm giving $5. Hey, come check it out for $5. But anyway, give you a chance to see if the community is, your cup of tea. Again, just tfmetalsreport.com.
Great. I'll put a link to that in the description below. And Lobo, could you tell us about the independent speculator?
Sure. For all three people still watching, I think the simple, just sign up for our free weekly digest. And if you do, you'll see that we don't spam you with a flood of daily advertisements. You get one email per week where I provide market commentary. And if you like the way I think, if you like the way I analyze things, then I hope you'll hire me to be your due diligence guy on the hundreds of companies we cover.
Great. Follow Lobo on Twitter. He shows up in my timeline. What's your Twitter handle, Lobo?
It's at due diligence guy. Thank you, Craig.
Good
yes,
stuff.
I'll put links to the independent speculator, both of your Twitter handles. I think people should follow both of you. And once again, really appreciate you guys coming on the show and sharing your knowledge with our audience.
Been fun.
Thank you, Jesse.